The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tom's out this morning. He'll be back doing his program live this afternoon, jumping into the markets. We're getting a little bit of a negative acceleration just as I speak right now. We get the S&Ps now down 25 points, pulling up the chart, 5-minute bars. Just since I came on the air at 10 a.m., which is 6 minutes ago, you had the S&Ps trading down from a high of 39.13. We're down about 16 points in the S&Ps in the last 6 minutes, below the lows that we had pre-market in the indices. You're down about 0.6%. NASDAQ 100 down 1.3%. You see the acceleration going on there. We had an intraday high print of 13,290. We've now lost 150 points in the NASDAQ 100 just in about the last 25 minutes. Got the Dow off 100 points, 31,815. The Russell off 15 points, 2270. Commodities, crude off about 37 cents, right near $63, 62.84. You have gold down about $25 at 17.73. And we got to jump over to notes and bonds. The 10-year down 24 ticks right now. You're talking about a yield in the 10-year of 1.46%. Remarkable action continues in the note and bond market. The 30-year down a full point and 5 ticks. We actually made a low of 158.08 at about 7 a.m. this morning. The 30-year now with a yield of about 2.3%. We'll jump over to the headline numbers this morning. Weekly jobless claims. So the headline print, weekly jobless claims, 730,000. The estimate was about 840,000. I want to get into real quick. Continuing claims, 4.42 million. You look at the number, you could say, oh, the trend is a nice trend, right? Lighter than the expectation in a big way. Continuing claims continuing to decrease. But when you look at the numbers, in terms of, though the overall number fell, the rolls of those filing through pandemic-related programs continues to rise with just over 1 million more claims on the Pandemic Emergency Program, which compensates those whose regular benefits have run out. All totaled, just over 19 million Americans are receiving some compensation as of February 6th, an increase of 700,000 from the previous week. Dicey numbers, folks, encouraging data as we move forward. But we're still in kind of some rough scenarios in a big way. The market, it's always interesting to see how this reacts, whether bad news might equal good news for stimulus, good news might equal bad news for stimulus. We're still in earnings season. Let's jump over to our man, Kevin Hinks, right after this program, folks. Fast Market on the TD Ameritrade Network. Kevin Hinks, Alex Coffey and the team breaking down the markets, breaking down hypothetical trades. We've had a big week of earnings this week. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, this market is dealing with today a lot of pretty good economic data versus interest rates that just won't, how do I say this, won't plateau out at any level. There's a lot of price discovery right now going on in the bond market, and that is making interest rates climb here now 1.46 on the 10-year, and that is just got people hesitant. I wouldn't call this a down market, Tommy. I would certainly call it choppy, though, for sure.
You know, it's really interesting, Kevin. You know, it's kind of the first thing that I look at now, especially over about the last 2 weeks. I mean, just taking a look at the 10-year. Since February 11th, exactly 2 weeks ago, we were trading above 137 in the 10-year. We're about to hit 133. Quite a fall off in the 30-year. I mean, the same deal. We were just at 167 on February 11th in the 30-year, let alone going back to where we were in August or something like that. And we're trading at 158 now. Big bars in a big way on a daily basis, and we're approaching some pretty lofty levels in the yield. I agree, man. The 10-year right near 1.5%, the 30-year right near 2.3%. And yeah, all things considered, the S&P, you put it on a daily basis, we might as well be sitting at all-time record highs across the board. But what, like you said earlier in the week, Kevin, when we were having, I think it was Tuesday maybe, the day is young. Well, the story has not been written yet, and we will see where we go from here. Of all the things we're looking at, Kevin, what are you guys going to be talking about on Fast Market coming up next?
Well, we got three names that we're looking at, and the first one with earnings out after the bell today will be Salesforce, CRM. That is a big earnings call for today because of the earnings the last 2 quarters for that company. And then we'll look at, like Folio will do a presentation on Beyond Meat. And then the final name we're looking at today, Etsy. So three really interesting names that we're looking at today on Fast Market.
You know, I made my first Etsy purchase, Kevin, prior to the Super Bowl. Got my new son a little Tom Brady goat onesie on Etsy.
Yeah, you did.
And I said to myself, my goodness, I see the appeal, man. People doing home, and I just see the appeal for people creating their own products as well. You know, it's not often you can't find something on Amazon or the like of it. And I just went to Etsy, man, and I could find anything I wanted. They had any type of onesie, any type of graphic, people just making use of their own time at home, being creative. It was pretty cool. And Salesforce, man. We have some Salesforce in my newsletter for disclosure, folks. It'd be pretty interesting to see. I mean, talk about the last 2 quarters, like you said. 2 quarters ago, they crushed it out of the park. They make a high at 284.50. Then, of course, the last quarter, they trade a little bit lower, decelerating growth.
But here's the thing, Tommy. Last quarter, they crushed it as well on December 1st, but they announced the Slack deal the same day.
Got it.
If you look at the earnings for Salesforce last quarter, they crushed on expectations. But in the same day they come out, and here's the numbers. They were looking for 25 cents in earnings last quarter. They came in $1.74 in earnings, but they announced the Slack deal that day, and the street had a theory that they may have overpaid $27.7 billion for Slack. That's what we'll talk about today. If that earnings news keeps up without an announcement of a Slack deal, this could be a volatile day in Salesforce for sure, because last 2 quarters in a row, they have annihilated earnings expectations.
They have, and I was reading a lot about them. In terms of just, the expectations coming into it.
Sure.
The number of acquisitions overall, right? I think they bought Tableau for something like 10, 11, 12, 13 billion. I'm ballparking there. And then they come out and they buy Slack. The story was that they didn't even have a competitor that they were bidding against for Slack. So the market a little dicey in that scenario. I am a believer in this company, the cloud space. You can't find a better space in a big way. But like we've seen before, when you trade from 115, right, Kevin, up to 284, you better be delivering, and you better be delivering in the future in a big way. We've pulled back. We're sitting at about 237. I'm jumping over to the Analyze tab on the Thinkorswim platform. They're pricing in about a $12.84 move, so maybe just over about a 5% move on their earnings. And we've seen this thing can really move, man. I mean, you go back to the August acceleration, you traded from like 210 up to basically 270 the next day. And like you mentioned, I mean, strong numbers their last quarter. They fall off. We saw what can happen with the likes of Home Depot and Lowe's this week. So, Kevin, I'm looking forward to the program, man. I'll be listening intently to see how you break down that Salesforce as they're coming out with their numbers after the bell. Well, we appreciate the update as always, Kevin. We don't talk to you tomorrow, so we'll be listening to the program at 11 o'clock, and we look forward to talking to you next week on Tuesday, man.
Thanks for having me on, Tommy. Have a great weekend.
Always a pleasure. You too, Kevin. Folks, if you haven't checked out the program, check it out today. Should be a good one. Salesforce, Etsy, they're going to be covering a lot. Coming up next at 11 o'clock. We'll be right back after 3 minutes, folks.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the markets in negative territory, resting just above 3,900 in the S&Ps right now, 3,901. Tech stocks pulling back yet again, 13,162. Jumping around to some of the biggest stocks out there, just taking a look. Amazon shares down about 0.5% right now, 31.45. Microsoft shares just about 0.6% in the red. Google has held up relatively well compared to even most of the big FANG stocks, down about 1.1% today. You put Google on a daily, though. I mean, my goodness, the high of 21.52. We closed yesterday almost 2,100. We're trading at 2,072 right now. Jumping over to Facebook shares. Facebook trading at 264.29. Been stuck in a consolidation, almost going back to really that gap it had from July 31st on their earnings. Facebook 264.18 right now. Jumping around to what else we have going on, we have to check in on the Reddit stocks yet again. Talk about an acceleration. We thought the fun was over. Not so much. Yesterday, things come roaring back. I mean, so interesting how this just comes out of nowhere. And you might not say nowhere, right? The news yesterday that GameStop forcing out, I believe it was their CFO, that he was not quite aligned with the new investor coming in. So you could say encouraging data. Not sure that should yield a result from going from $45 up to $200 after the market. I mean, you closed yesterday about $92. This thing shot up to $200 before 5 p.m. Eastern time. We almost made it back up to that level at 7:30. We see the acceleration to lower prices on the open this morning. We opened at about 170. We're down to 122. AMC with some similar action. We spiked to 11.89 yesterday from almost $7.60. Back to GameStop quickly, right? You go to GameStop, pulling up the Analyze tab. We'll slide it down. You're talking about a market cap of about $8.5 billion right now on GameStop. That's at 120. Just be careful if you're out there trading these stocks, folks. I mentioned to a friend yesterday, I mean, there was somebody was talking about, an $80 call yesterday, yielding somewhere in the tune of 9,400%, an $80 weekly call. My actual analysis of that was I was surprised the return was only 9,400%, because if you had asked me yesterday that the odds that GameStop makes it above $80 this week, I probably would have said less than 1%. And it just shows that this things have changed, and this is almost, I call it almost, it's turning into almost a hot potato game, right? Where these stocks are almost just momentum driven, and it's a hot potato game for millions of dollars made or lost, and you just want to be the first one in and the first one out when it peaks. It has no bearing on future valuations. When you're trading from $45 up to $200, back to $120, we're only 51 minutes into the trading day. Just be careful on those equities, folks. Doesn't mean that people aren't trading it. Doesn't mean you can't make money. But it doesn't mean you can't lose a lot of money in a heartbeat in a big way as well. I mean, who's the person who was buying at 200? Who's the person who was buying at 170.01 this morning when it opened? You're down almost $50 right now on that equity. And we'll see where we goes. I mean, all things considered, I imagine this is back on its way to about $50. When it gets there, anyone's guess. All right, jumping around to what else we have going on. Twitter. Talk about an update from Twitter this morning. Twitter said that it aims to have 315 million monetizable daily active users by the end of 2023. It also aims to at least double its annual revenue in that year. The market loving that update. TWTR. Twitter shares up 7.5% today. Talk about an acceleration. Just almost in the last month, you have Twitter going from $44 up to an $80.75 high. Remarkable action in a big way over on Twitter. What else we have? Best Buy out with their numbers. Best Buy earnings beat expectations. Seems to be the trend here. Best Buy's fourth quarter and trades lower. That is the trend. Beating expectations, trading lower. Best Buy's fourth quarter earnings outpaced Wall Street's expectations, but fell short on revenue as its sales growth slowed compared to the earlier months of the pandemic. We've seen it with Home Depot, and we saw it with Lowe's this week. Some of these equities, all right, and I put out an update for my subscribers this morning saying it is so difficult for some of the equities that have performed so well over the last year. Best Buy goes from 48 up to 125 almost. We're back to 107 right now. I'm going to put this on a 3-year weekly just for a little bit more context. We were trading at about $90 coming into the COVID closures. We trade down to 48. We're up to 124. We'll put it back on a daily. A lot of the optimism of these equities is already priced in. A lot of the acceleration that some of these equities in particular, whether it was Best Buy outfitting your home, right? Whether it was laptops, whether it was TVs, people buying home office equipment for technology to outfit their home office that they may not have needed. It's going to be very difficult for the next 6 or 12 months for these equities to be performing in a manner consistent with has been priced in over the last 12 months. Now, I'm talking about some of the equities that have accelerated so much higher, in particular, whether it's Home Depot. You just saw Home Depot over the last 5 days, right? That's going back. There is your Monday print, all right? We back it up to Friday. You were as high as $283. Home Depot just shaved, what's that, $25? Almost 9% off of the equity in basically a week, down to $258. I mean, super strong company. They're going to be fine in the long run. But in the near-term future, you're seeing a rotation, and these companies are going to struggle. Lowe's in a similar fashion. Now, Lowe's more retail than Home Depot. Home Depot dealing with contractors, but you just traded from $180 down basically $18, almost 10%, down to $161.98. Shouldn't be hard to imagine that these companies will struggle to keep up with the growth that they have seen over the last year. It should make sense, folks. People are going to be traveling. They're going to be seeing their families. They're not going to be staying at home, outfitting their second bedroom. They're not going to be, fixing up their home office in any way like Best Buy. Just keep that trend in mind as you see some of these equities. I mean, even the likes of NVIDIA. Strong numbers, but you just traded from 180 to 614. All right, it's tough to accelerate higher when so much optimism in so many equities is already priced in. You see a pullback. We're down about 3.6% today on their earnings. Pretty decent earnings. But looking forward, they're still dealing with some shortages in terms of chip supply. NVIDIA is down 3.6 on their numbers. And as Kevin mentioned, we get Salesforce coming up after the bell tonight. So Salesforce, a juggernaut of a quarter back in August. They had some strong numbers, as he mentioned as well, in the December quarter. The Slack purchase looming large. Now, they confirmed it in their earnings call, I believe it was announced prior to that, and this is where you saw the vast acceleration begin, from 266 down to 246, $20 shaved off that instantly. They get into more of the specifics, and the market just thinking they overpaid in a big way. Might be a good long-term growth position for that company, but the market worried when anytime, and it should be. You're spending $27 billion. You jump over to the Analyze tab for Salesforce. You're talking about a $13 move that they are pricing in on their earnings tonight. That company, a $218 billion company, going to their numbers. A Dow component, always nice to be a Dow component when you have a bid under you in the Dow. But they got a lot to live up to, and I'm sure they'll be talking about that acquisition as well. All right, folks, stay tuned. We'll be coming back after the break. We got the S&Ps hanging above 3,900, 3,901. Gold pulling back $25 today at 1773. We'll keep our eye on those notes and bonds. The trend to lower price, higher yield continues. The 10-year right now down 26 ticks. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps down about 25 points, trading at 38.97. We're going to take a look at Macy's. We had a question on the YouTube Tigers Den over here talking about Macy's. We'll pull up Macy's. I'm going to pull up Macy's on a long-term monthly just for some context here. Check out this chart, right? 2008, we make lows of 5, $2.07. You trade up to $73.61, a one-way rocket ship to the upside, and then just things really fall out of bed from $73.61. And that's talking about in July of 2015. We make a low in November 2017 of $17.41. You trade all the way back up to a high of almost $42, $41.99. We'll put this now on a daily so we can get a little bit closer look at things. COVID, you make a low of $4.38. You chop around for a while. Things get a little bit exacerbated to the upside of $22.30. We've now backed off. We had their earnings a couple days ago, and Macy's trading at $15.98. I mean, we had some serious volume up at these highs in a big way. When you look at the move we have, I mean, right away, just a run, just to put a little Fibonacci analysis on this thing. We've pulled back right to that 50% level, right? And we're kind of bumping up against the 382 number, and that's from basically the lows we had going back all the way to November. You put this thing back on a 3-year weekly again for some context. I'm going to take that off just to make the chart clear. I'd be a little concerned with Macy's in a big way, and I say a little concerned in a big way. A great trade for the reopening trade, right? We're talking about a $5 billion company right now, Macy's, okay? They've basically come right back to where you were prior to COVID. Now, just a little bit fundamental before I get into the technical aspect, because you really have a lot of volume here going back to June. Okay, so the dicey part of this is I could see this coming back and testing maybe the high of June. You're talking about 1046. Because in my own head, you had Macy's chopping around between about August and maybe potentially February of 2020. So that's prior to COVID, basically right where we are right now. And I struggle to believe that Macy's is in just as good of a spot as it was prior to COVID. Okay, they had quite a hellish year, to put it no other way, during COVID. Malls shut down. But the landscape of things has changed in a dramatic fashion. I am a Macy's cardholder, I guess. I haven't used it in ages, right? Signed up for it, not the credit card, just the Macy's card to get some type of deal when I was in a Macy's. I enjoy Macy's. But boy, is it tough to think about how you compete in today's landscape with the way Macy's is formulated right now. The type of rent that they have to deal with in some of these malls, I don't know how you compete with some of the companies out there. Now, clothes is one area that has not quite come into the online delivery of everything, right? People like to try on clothes. I'm one of them, right? You like to try it on. You like to feel it. I enjoy that experience, but I'm not sure I enjoy it to the tune of the storefronts and the footprint that they have in some of those malls. And listen, the one thing that we really saw when COVID shut down, capitalism, the businesses in the U.S. and the world, so creative and so able to pivot and adapt in a COVID environment to excel far greater than we anticipated when things were first shutting down, right? The estimates of some of these companies, very dire in the beginning, but they pivoted. You had the companies like Dick's Sporting Goods, for instance, comes to mind, just really capitalized very early on. And look at this chart from Dick's, right? $13 up to $80. As Dick's, you know, you could order online. You could pick it up in their parking lot. I ordered sneakers at one point, really early on in the pandemic when things were very dicey, a little bit scary with COVID, not sure of some of the details. We didn't know if a vaccine was coming. It was just like an Outback delivery curbside takeaway. These companies pivoted in a big way. Now, you're going to see that happen with malls, all right? They're going to change their business plan. They're going to bring in, whether it's social functions, maybe you have hockey rinks in there, maybe you have movie theaters that drive the action, restaurants, social functions. So that will exist. But Macy's is a tough sell, man. You've jumped now from $5 in November. You've tripled in price up to $16. This is all factoring in that we're going to get over COVID. It's coming in the next few months, folks. Thank goodness, in a big way. You got Macy's up almost 5% today, accelerating higher, okay? I'd be a little bit worried, though, depending on how you're trading that, because in the long term, it's a tough one to imagine how they operate with the business plan they currently have. Doesn't mean that they can't get it done in a different manner, but they have a tall task ahead of them when their business plan was basically one of the biggest, nicest stores in big malls, and paying for that type of retail space in an environment and landscape that's changing dramatically is just a tough one in a big way. So putting back on the daily, a little bit of technical analysis in here, right? You have those a high volume high going back to basically June 9th. That high of 1046, that's the highest bar out there in a big way, folks. And you came back down and tested that area right here in December as well. You had some volume up here in the highs, but that was quite an acceleration from $22 down to $14. We're sitting at $16. I might let this pull back a bit, maybe even to the $12 level, or as I mentioned, maybe take a little bit more patience down to about $10.57. Jumping around to some of the other equities, Norwegian out with their numbers. Norwegian down about 5.6%. Jumping over to their numbers. That's not what we want. Here we go. Norwegian, well, they say they rose pre-market, but that did not last. Let me drive it into the 15-minute. There you see the sell-off as the market opens on Norwegian. Quarterly revenue above estimates despite COVID-related shutdowns, a loss of $2.33 a share. The market's looking for $2.17. I mean, the cruise lines, you know, if you're looking for a long-term trade, yeah, you might have some value here. You just went from $15 up to about $30. You know, we have some serious volume basically at some of these highs here. Your high back in June when the market got a little ahead of itself, 26.91. You could look at that area. We've chopped around 25, putting this on a 3-year weekly. Norwegian was at $60 prior to COVID. We will get back to that world, folks. We're going to get back to a normal world where cruise lines are just normal and we're not fearing COVID. I don't know if that's happening though. Like in the immediate future, cruise lines going to be the last basically function of business that resumes normal action. Jumping over to Carnival since we're on it, pretty similar action in terms of basically at 50% of the price that we were at. At $50, you trade down to $8. We're trading at about $26.15 right now. Jumping over to Wayfair. Wayfair out with their numbers, putting it back on a short term. You spiked to 228. We almost rise to 300. You talk about some volatility. We're now just up $10, up 3.8% on their numbers. Wayfair earned $1.24 a share, above the 86-cent estimate. Revenue slightly below forecast, though. The number of orders and shares fell let me rephrase. As were the number of orders. So revenue slightly below, number of orders below forecast, not what you want to see. The market never cares if you make money in earnings, but you take in less money in revenue and you take in less number of orders. All that means is you're cutting costs somewhere. All right, and you can't cut your costs to growth in a big way. You can't do it. So the market trades up to 300 on a little optimism. We'll jump to the daily. I mean, some of these home companies, this is one of the cases, folks. Talk about an acceleration. I mean, you go from 21 to 369. But boy, the next year is just not going to be like what the last year was like. I mean, let's take a look. One of the other ones that comes to mind, Restoration Hardware. You want to talk about an uptrend channel. My goodness, I've had this channel on here forever. And it's just skipping along the bottom of the line at about $4.98 from $73. But they got a lot to prove in the next year as things change, folks. All right, I cannot wait to go dine in restaurants, travel, see my friends, see my family. I'm not thinking about outfitting my home if I wasn't doing it already in the last year. Stay tuned, folks. We'll be right back in 3 minutes.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Are you grinding in the market but seeing little to no return? Or are you a successful trader simply looking to make his job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find a path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Little negative action in the market. S&P is down 31 points right now. NASDAQ 100 down 185. I'm going to jump to GameStop real quickly because, man, Dan's talking about in the den. We've had a couple. I mean, just the volatility in this equity, folks. I don't know how you trade this thing right now. Jumping over to the options, just a quick glimpse of the type of moves that are priced into this thing, okay? We're talking about the weekly options that expire tomorrow. Look at some of the prices of the calls in GameStop. Now, an at-the-money call is priced in, you're at about $40, okay? You go out, I mean, there is value. You want to buy a $400 call, you're paying $8. $400 call, you're paying $8. This thing was at $45 yesterday. It's just an example of the craziness and the ridiculous of things that are going on in this equity. Don't take anything else away from it than that. Crazy action in a big way. All right, what else we got going on in the market? So I'm going to jump back to what I was talking about in terms of weekly jobless claims. Talked about this a little bit at the beginning of the program, but something to keep in mind when you see, you know, some of these headline numbers. So a solid number in a big way in terms of unemployment insurance, first-time filers for unemployment insurance, weekly jobless claims, 730,000. The market was looking for 830,000. You could say the trend is heading downwards. Okay, we're at 730,000 right now. That was a decrease from the 841,000 we had last week. What I like to remind people is in any other world, in any other year, this would be a record week for weekly jobless claims at 730,000. I believe the record prior to this was 692,000 or 672, something like that. We had never seen 700,000 weekly jobless claims prior to COVID. We've seen some really tough economic situations, but never all at once like we're experiencing right now. Continuing claims, definitely encouraging data. Right? We reached 25 million at the peak of it in May. We're now down to 4.4 million. But what you're seeing is a lot of people losing state benefits. You lose state benefits, you're off continuing claims. What do? You then go to the Pandemic Emergency Program. That number continuing to rise. So you're going to see this play out. It's going to be a battle. We're dealing with stimulus right now. There's going to be a vote tomorrow. I guarantee this is going to be brought up, saying encouraging data, right? People not filing. We're seeing a decrease in weekly jobless claims. We're seeing a decrease in continuing claims. Just trying to put the data out there so we all have a nice grasp of what's actually going on. Though the overall number fell, the rolls for those filing through pandemic-related programs continued to rise, with just over 1 million more claims on the Pandemic Emergency Program, which compensates those whose regular benefits have run out. All totaled, just over 19 million Americans are receiving some compensation as of February 6th, an increase of more than 700,000 from the previous week. More recent data shows, however, the claims are rising in the Pandemic Unemployment Assistance Program, which provides benefits to those who normally wouldn't be eligible. For the week of February 13th and 20th, more than 940,000 Americans filed under the program. So I think this is what you're seeing Chairman Powell over the last 2 days professing, saying we're a far cry away from where we need to be in this economy. He is nowhere near slowing the aid and the buying that they're going to be doing and the bazookas of cash they're going to be putting into the bond market to stimulate this economy. And this is the reason why, folks, 19 million people receiving some compensation. All right. We have continuing claims decreasing. That's the argument made for stimulating this economy. We have stocks at basically all-time highs. That has a lot to do with stimulus. All right. Just because stocks are sitting at 3,900 and just because continuing claims are decreasing to 4.4 million. There's a lot more happening out there, and we're about to get over the hump, and I imagine we're going to in the next 3 or 6 months. But some harsh numbers when you think about almost 20 million Americans on an assistance program right now as we continue to struggle with COVID. Other economic numbers out there this morning, we had showed that spending on long-term lasting goods jumped 3.4% on the headline. Nice number, especially when you look at 1.4%, excluding transportation, both well above estimates. Also, the second reading of GDP for the fourth quarter of 2020 showed an increase of 4.1%, just 1/10 percentage point from the initial reading, but slightly below the 4.2% estimate. All right, what else we got going on, jumping around? Facebook out there. They are going to be launching, come on, an ad campaign to defend personalized advertising ahead of Apple privacy change. Good luck to them, folks. I am not a big fan of Facebook. We have a Facebook account for TFNN, but in general, I think Facebook in general fosters a negative attitude of almost everything. People go on there to complain about almost anything, whether it's politics, whether it's life. Nobody, by my expression I like to joke about is nobody goes on Facebook to write, hey, today's a great day. I woke up. It's a great day. It's a great day. I'm having a good time. Today's a great day. That's not what they go out to Facebook to. They go out to Facebook to gripe. It becomes like a personal social atmosphere to gripe about whatever you want to gripe about. Now, listen, I love looking at my family's pictures, right? My family I don't get to see up in Boston. I enjoy Instagram actually a lot more, a Facebook property, because it's just more pictures as opposed to written posts about what people want to profess about, because what people want to profess about is mostly the things that they have problems with, as opposed to professing about the things that they don't have a problem with. Now, when it comes to personalized advertising, yeah, Facebook loves that because they make boku bucks off it. But as an Apple user myself, I can't wait for Apple to basically kick that stuff off. I don't want the personalized advertising. I don't want them tracking me. I don't care what Facebook thinks. So just something to keep your eye on as you see these campaigns coming about. They're launching a new ad campaign called Good Ideas Deserve to Be Found, which makes the case for personalized advertising. Listen, as TFNN, right, we advertise on the web. I understand the benefit of small businesses targeting citizens, all right? But I'm looking at this as a citizen, folks, okay? And businesses will be just fine advertising without every person being trackable down to the nth degree of who you are and what you do, and allowing companies like Facebook to access that information and target you for that information. It's my personal opinion. You're entitled to your personal opinion as well. But you're going to see this play out in a big way, because this is what has made Mark Zuckerberg a very, very wealthy man. We got Facebook down today 1.1%. It's held up relatively well in the face of all the criticism they've taken, right, during the politics of things, just during the tracking of things. I don't trust Facebook for 1 second with any of my data, folks. I try and keep myself off there as much as I can. Facebook, though, performed relatively well, but this is going to be a battle in a big way because it represents basically a majority of how they do business in terms of advertising to targeted advertisers. Jumping over to Apple, pulling back a bit with some of the tech stocks. We're down about 1.7% on Apple. We're seeing an acceleration, folks, right now. We started the program with an S&P sitting at about 39.13. We've traded down 33 points now since we've been on the air just at 10 o'clock. Stay tuned, folks. We'll be right back after the break. I'm going to talk about Basil Chapman. Talk about a good time. He's doing a webinar coming up Tuesday. Those GameStop, AMC stocks are rocking. We'll be right back.
Is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got GameStop shares up 56% right now. That's following about 100% pop yesterday. We got AMC shares right now up 11% right now. It's following quite an acceleration yesterday as well. Perfect timing, folks. Basil Chapman, he's going to be doing a webinar on Tuesday, March 2nd, right after my dad's program at 4 o'clock from 4 till 5:30 p.m. Eastern Time. He's going to be talking about what impact will the tremendous increase in the public's participation in the stock market these past few months have in 2021. Folks, he's going to be talking about this action going on, still going on, all right? If you thought it was done, it ain't done. It's still happening right now. And he's going to be talking about how this impact is going to be shaping the market in the foreseeable future. Is it a market positive? Are there historical examples? What are the negatives? Which sectors could benefit? We're seeing some of them today. What stocks fit the theme? Does it portend a sudden deep market slump? What technical tools should continue to work? As the economy opens back up, will consumers go back to the way things were? And what COVID-impacted changes will become a part of the new economy? That's a 90-minute webinar, Tuesday from 4 till 5:30. It will be archived if you can't attend live, and you'll be signing up for the opening call, Basil's daily trading service. For all you current subscribers out there, you gain automatic access to this live webinar taking place Tuesday. It will be archived as well. If you haven't tried out Basil's newsletter, folks, give it a try. You can sign up for a month for $149. You can sign up for 6 months for $695, a year for $1195. All of them, no matter which one you choose, comes with a 30-day money-back guarantee, and he's got a number of different archive webinars in there as well. Basil filling in for Larry this morning at 9. He's going to be back on the saddle at noon for the Tiger Technicians Hour. Stay tuned, folks. Fast Markets coming up next. Basil at noon. Steve Rhodes, Dave White, Tom O'Brien, my dad, live at 3. Live programming all day. For the rest of the day at TFNN, interesting day in the markets as it continues. S&P down about 33 points, folks. Thanks so much for tuning in. Stay tuned. We'll be right back.